Afternoon. Thank you for joining us for Sampling Accounts Receivable with IDEA. Our presenter today is Chris Mela with Berntson Porter. This webcast is worth 1 hour of NASPA CPE. In order to receive the CPE credit, you must be logged in for the entire hour, answer 3 of the 4 alertness checks, and complete the brief evaluation at the end of the webcast. We are recording the session. The session slides and recording will be sent out to you tomorrow. Qualifying attendees will receive their CPE certificates within a week. If you have any questions, please type them in the question box on the right side of your screen. We will answer them at the end of the webcast. Welcome. Thank you for joining us. I'm going to go ahead and turn control over to Chris. Chris, how are you doing today?
I'm doing good. Thanks, Lindsay. Okay, everybody, welcome to today's CPE. We're going to start just a quick little disclaimer that this is just kind of general information about IDEA, not specific accounting advice, but I'll let you kind of read that yourself. Pretty standard language, I think. Hope. So going on to, here's kind of the agenda and our plan for the next 50 minutes or so. I'm going to give you a quick background on Berntson Porter and myself, and then we'll jump into the actual meat of the topics, and this is going to be a little bit more of a technical session. We'll discuss the theory behind sampling and audits, some of the common sampling methodologies, and then how they can be done in IDEA. And I have a sample IDEA file, which I believe is with the PowerPoint that you can download. So if you have IDEA, you can kind of look and follow along and kind of practice it yourself. And then if we have time, we'll discuss some of the other tools that we use here at Berntson Porter in our audits, and just some of the various functions that IDEA provides as well. That's kind of and then we'll end with a little Q&A, and hopefully you guys will have some questions for me, and hopefully I'll be able to answer them. So jumping into kind of quick introduction, I'm Chris. I'm a manager here on the assurance side at Berntson Porter. I've been here since 2012. Berntson Porter is one of the largest CPA firms in the Seattle area. We have a large practice in construction, distribution and manufacturing, and professional services and hospitality. We are a full-service accounting firm, so we do audits, tax, estate planning, state and local taxes, valuations, M&A. If you can think about it, we can do it, or we have a reference for you. And kind of the reason I was asked to do this presentation is we started using IDEA in 2012, right after I started here, and I was kind of one of the team members that really spearheaded the implementation and adoption of IDEA here at Berntson Porter. And we started very lightly using it primarily for sampling, which is kind of where we're going to focus today. And we've since grown and expanded the use of IDEA in all of our audits over the past 5 or 6 years. And it's been a great tool. We all love using it. It makes auditing a lot more efficient and, in my opinion, a little easier to do. So that's kind of been our focus. So kind of jumping into the basics and the theory behind sampling and audits. This is kind of the guidance directly from the clarified auditing standards. And sampling is basically the selection and evaluation of a subset of the population such that it can be extrapolated and it should represent the population as a whole, because no one really wants to test every single invoice in accounts receivable or every check dispersed through the year or every sale made. So we sample so that we can hopefully take a smaller population, test that, and if that doesn't have any issues, you should be able to extrapolate that to the rest of the population, and it should represent the whole population that you're testing. It's kind of a classic example that I like to use is, if a company sells one, majority of their sales are one type of widget that's, $5,000, and they sell like half of their sales are this item. You would expect at year-end half of their AR to be related to that item, and half of your sample should be roughly related to that item as well. Kind of shows that it goes all the way through. That's just kind of the theory behind sampling. One of the nice things is that it's used anywhere in audits, right? It's used in control testing and substantive testing. So if your client has good controls in place, you've done you've done effective walkthroughs and you think that if you do control testing, you can reduce the risk in other areas, you'll use sampling to kind of pull items to test for your control testing. And likewise, if there are higher risk areas or you want to do more substantive testing, you're going to end up sampling in that as well so that you don't have to test every item, kind of as we already mentioned. So the two major statistical approaches to sampling, and there are a few others that I'm not an expert in, so I'm not going to touch on those today, but we're going to talk primarily about classical variable sampling, which is commonly referred to as your random sampling or your stratified random sampling. And this is a theory that if you just pick randomly throughout a population, theoretically your selection should represent the whole. And monetary unit sampling, or probability proportional to size sampling, is the idea that the larger an item in the population is, the more likely it is to be selected, and the more important it is to the population as a whole. So if you have, thinking about AR for example, if you have an invoice outstanding that's $1 versus an invoice that's outstanding for $10,000, under monetary unit sampling, it's more likely that you're going to pull the $10,000 one, which makes sense because that's a bigger portion of the population. Issues with that are going to be more material to your audit. So there's kind of some follow-through logic that by picking items of higher value using monetary unit sampling, you're hopefully getting a more appropriate population for your testing. And so this is I'm going to show you real quick the idea file here that I have used. Yeah, there it is. Perfect. So, and this is just a quick sample, little 50-item AR listing that I made up while prepping these materials, and it should be available for download. So any of the procedures that we kind of walk through today, you should be able to reperform on this sample file that you have in Excel, and it will get you the same exact file. And that's kind of the theory behind using IDEA, and what makes it so valuable to us as a CPA firm is that the core auditing guideline is that someone independent of the audit should be able to reperform exactly what you can do and get to the same exact conclusion. And IDEA really makes that possible. Prior to this, if you used to use, or if you do use Excel for random sampling, like every time you load an Excel file, it recalculates random numbers, so you can't do the exact same thing over and over again. And IDEA really makes it easy to do that. I like to, when I first tell people about IDEA, I kind of refer to it as Excel on steroids, because it does everything I want to do in Excel, just better a lot of times. So we kind of talked about that we're gonna go into random sampling and monetary unit sampling, but first we're going to focus kind of on those random samples and the different types that you have. And so there's really two, in my experience, two major classical variable sampling methods. There's purely random, and then there's stratified random. And both of these have kind of similar benefits in that if you are expecting there to be a difference, if you know a control isn't working, or you know that they have a new AR clerk that maybe had some issues, getting adjusted for the first month of the year, or just historically there have been mistakes or credit memos or whatever the case may be, you can actually end up with a smaller sample size if you do random sampling. And additionally, if you run into those errors that you're not expecting, it's much easier, especially with the help of IDEA, to expand your sample and select additional items to test without having to go back and cross-check and say, does this, is this one of the items I already tested? Is this valuable for me to test? It's kind of just easy for IDEA to add on additional random items to it that you might not have been able to do under other methods. In my experience, I find that random sampling is kind of the better approach between the two if I'm in a low-risk area or if I'm doing control testing, because then it's purely random. I'm just testing it for the controls and for the areas that are not super, not of as high of a concern in the audit. I find that stratifying or breaking the population into categories based on size is better for areas that have higher risk and for substantive testing, because obviously you want to make sure that any item that's material or individually significant is tested. So you can stratify the population into the different categories and then kind of test based on that. So that's kind of been the key focus. But all of these are going to be in the same area in IDEA itself. You can see here, and this is a screenshot of the sample tab, and we'll jump over to IDEA and see it in a second. Random is right here. There's stratified random in the other category, and then we'll talk about monetary unit in a little bit. That's all right there. IDEA can also help you with attribute sampling and systematic sampling, but those are ones that I'm not really an expert on, so I'm not going to speak to today. And then, yeah, that's kind of the gist of what we'll be covering. So I think Lindsay will do a first attendance check here.
Yes. All you have to do is select the word sample, and that will let us know that you are here and engaged with us. I want to also let you know, I forgot to mention this earlier, that the slides and the file that Chris is going to be using in his example are available as a handout. So you can download those. They should show up on the right side of your screen under your questions box. And you can go ahead and download those right now, and that will allow you to sort of follow along if you would like to. I'm going to give you a few more seconds to complete the check-in, and so again, you need to do 3 of the 4 of these. All right, I'm not seeing any more movement. I will go ahead and close this and turn it back over to Chris.
Perfect, thank you. So as we kind of jump into the technical aspect of how IDEA does random sampling, when you select random sampling, it's going to open up this little pop-up window for your random record sampling. And the first thing, there's really only 2 things that you ever need to do on this file. The first thing is to tell IDEA how many records you want to select. And this is based on your audit approach and the risk for the audit area. Excuse me. So for accounts receivable, depending on what you've set, what you've determined materiality to be, and the identified risks that you've addressed or that you are concerned about for accounts receivable, that'll obviously determine how many records you want to select for random sampling. And then once you determine this, and for this case, for the example that we're going, we're just going to go with 10 for most instances, which is about 20% of the population, since there's 50 items in that AR file. And then the other item that you want to change is obviously the file name, so that when you come back into IDEA, later to relook at your sample, you're not confused on where it is. A lot of times, IDEA will just have a default file name for you, and if that file already exists in your project, then it'll just append a 1 to it. So it's kind of important to make sure that you name it something that'll be familiar when you come back to it. And then one thing to note, not really anything that you have to change, is this random number seed. And since computers can't actually do purely random calculations, it uses an algorithm to actually pick the items pseudo-randomly. And so this random number seed tells IDEA where to start to pull those items. So every time, and I think it pulls it based on your system clock, but when it generates this random number seed, just note that for your audit documentation. And that way, if a peer reviewer or a reviewer or approver, whoever comes in, wants to reperform the work, they can actually go into IDEA, put in the same exact random number seed, and their sample will be the exact same sample that you selected, which is nice for consistency in IDEA. So we'll kind of jump over to the IDEA sample file, and I'll show you how this process actually works. So you can see here's the basic file, and pretty much everything that we're going to do today is in this analysis tab up on the ribbon on the top. And you can see there's a lot of options and a lot of features that IDEA has. Primarily, we're going to spend our time in this sample section over here on the far right. And if you click random sampling, it'll take a second, it'll pop up with that window. And kind of the same, you can select 10 records, and you can see that the random number seed it's generated is different than what we have on the PowerPoint, because obviously it's a slightly different time. So if we just do a random sample here and click OK, that's all you have to do is file name, number of records, click OK, and you have 10 random items. And it's the same exact information that's in the database, the invoice, date, number, customer ID, invoice amount, balance outstanding. And then it adds on this sample record number, which tells you where in the initial file this record is. So we see the first one is record number 8 for 2275. If we go back to our file and go to the 8th item, you can see that it is 2275. So if you need to go back and look and find it in the actual database, or you want to double check that for some reason, IDEA adds that as well. And if you want to see real fast this random sample AR control, this is the original 10 that generated based on the PowerPoint. And so if you're wondering, well, I pulled the sample, but I forgot to write down what my random number seed is, so how could someone reperform this work for me? Well, IDEA has, one of the nice features that IDEA has, which I think makes it really useful for CPA firms, is an in-depth audit trail. So over here on the right, you can always look at the data for any database, but in this history field is an in-depth audit trail that starts with whatever file you made. So you can see here we made the AR example. I named it AR example, all the way to this random sample. And in the detail for that, it tells you where I've made it, and it shows you this random number seed down here kind of in the middle of the screen. So if I wanted to remake our random sample with 12479, I could go back to our database, put in that random number seed, 12479, and then when I click OK, it's going to give me the same exact sample between these two files. So if I go back here to the data, and you can see that nothing changes between these two. It's the same exact sample, which is a really good ability to be able to reperform your audit procedures and your sampling procedures in IDEA. So I find that super helpful. Maybe that's just me. So that's kind of the basics for random sampling and how easy it is to just pull a sample in IDEA. If you want to stratify your population into different categories, there's one extra step, which is you have to tell IDEA what thresholds you want for your calculation. So it's actually a two-step process. You can't just click sample and pull a sample. You first have to tell, to stratify, you first have to tell IDEA what you want to stratify the population based on. And that basically means how do you want IDEA to group the population. And so you can see on this window that pops up, there's 3 different types of stratifications. There's numeric, character, and date. So I think in general, most of us, especially when you're first using IDEA, are going to work off of a numeric stratification. And that's basically saying based on a certain value, we're going to break it into groups, everything over 10,000 and everything under 1,000. So we'll have like 3 different groups, for example. You can also perform date stratification. So for example, if you addressed a risk in a certain month of the year for something, you could stratify based on the date and actually select more samples from that month to get confidence that everything's correctly stated there. You can do the same thing on a character stratification. It's grayed out on the PowerPoint because the sample file doesn't have any fields that are character-based. It's all numbers and dates. But if you had like journal entry testing, for example, and you wanted to test entries made by a certain user, you could stratify them based on the user and select samples that way. So there's a lot of versatility. It's kind of it's almost a bit of a creative outlet on how you want to think about using IDEA, because it's a very powerful tool. It can do a lot of things. But once you've selected how you want to stratify it, so in this case we're going to do a numeric, when you click continue, it'll open up this stratification window that asks you where you're setting your incremental limits. So for this example, if we're worried about the balance, so we want to stratify based on the outstanding balance at year end, we're going to do everything under 10,000 is one stratum, and everything over 10,000 is a second. So those are kind of our, like, say, individually significant items. We've identified everything over 10,000 outstanding. It's something we specifically want to look at. Everything else we'll be a little less concerned with. And so you can kind of set those thresholds. And you can see here it automatically adds a line based on whatever increment you set in the top of this window. But you don't have to have multiple lines. If you just want it based on one cutoff point, you can have one line. IDEA will kind of show you the upper and lower bounds of that, and we'll kind of see that in the next tab. So once you click OK, it'll stratify the population and create a second database, and then it'll ask you. This is actually the sample window. Say how many do you want of each stratum that you've set. So for this example, you can see that the 50 items, there's 3 over 10,000, and the rest, all 47, are under 215, which is the lowest number in the database. And so it automatically kind of sets the lower number for you. But you can see it also creates this under threshold and this over threshold, so anything under 215 or anything over 20,000, and you can see there's 0 in either of those. And if you cut the limit just at 10,000, this would say like over 10,000, and it would show 3, and there wouldn't be this line. We'll see that in a minute when we kind of walk through the file. And similar to random sampling, it gives you a random number seed, just the same, and you can follow the same procedures to go back and reperform this and retest this the same way. So if we kind of jump over to the actual IDEA file and go back to our AR example. So if we go to Stratified random sampling, which is again in this sample section, the stratification assistant will come up, ask how you want to stratify it. We're going to do it based on the balance here. So we'll field to stratify. We want to change the balance because that's what we're concerned on. And then we're going to set a $10,000. That's 100,000. Whoops. $10,000 threshold, and that's really all we have to do. We don't even have to click onto the second line. We can say, that's our hard cutoff idea. Help us pull a sample. And when you click OK, it'll pop up with this window, give you a random number seed, and then you can say, okay, well, we want to test everything that's individually significant, and since we're testing 10 items, the rest will be in the small balance. And when we click OK, it'll generate a very similar database to the first one, which has all the invoice information from date to balance, and it has where it is in the original sample record, so the first item, the third, all the way down. But it also adds in this stratum column, which is basically what category it's been assigned based on the value you've set from lowest to highest. So you can see all the items over 10,000 are in the second stratum. So here, and this 14,000, and the rest are in stratum 1. And so if we determined based on our audit approach that items under $1,000 in total were not material to the project, we could actually not have to sample any of those items using the same method. So if you go back to the sample file, we do the stratification assistant again. Why is that? Oh, I didn't put it on the right category. Oh, apologies. So you can see it defaults to grabbing the first numerical field, so this invoice number, and you can see the lower limit is not quite what we expect. But when we change it to balance, it automatically updates to the correct field. And so if we said everything under $1,000 is not material to us, anything between 1,000 and 10,000 we want to sample, and anything over 10,000 we have to pull because they're individually significant. We can just click OK, and the same kind of population will show up. It'll say there's 15 items under $1,000, so if we're not concerned with those, we could grab the 3 here and 7 more, and that would be our selection of 10 in the totals. Or if we wanted to grab one of those just to test, and you could break out the stratums. And so you can kind of determine based on what areas are of larger risk to you in your audit. You can adjust your sample, how much of each stratum you want to test to get to your total population for sampling. And same way, click OK, and it'll generate a database for you. And here you can see the one item under $1,000 outstanding is the first stratum. Most of these are going to be in the second stratum between 1,000 and 10,000. And then the same way, we're going to pull everything over 10,000. And that's kind of the meat and potatoes behind stratified random sampling. It's pretty intuitive once you do it a couple times. IDEA's UI is pretty easy. but that's the core of the two sampling approaches that we're going to go over. So I think I'll give it over to Lindsay for another attendance check.
Thank you, Chris. Our term for the attendance check, our alertness check, is AR. So please go ahead and select AR. And I'll give you a few seconds to get your answers in. Just a reminder, you need to fill out 3 of the 4 alertness checks in order to receive the CPE credit. All right, I'm going to give a few more seconds. All right, turn it back over to you, Chris.
Perfect. Thank you, Lindsay. So now we're going to jump into monetary unit sampling, which is the second methodology after classical variable sampling that we'll talk about today. And there's a lot of benefits to both forms of sampling, both random and monetary unit. Some of the ones for monetary unit is that it automatically identifies and selects individually significant items. So we kind of mentioned earlier that in your planning for random sampling, you have to determine, based on materiality, what is your threshold for individually significant items, and then you have to test those items in addition to sampling. And so monetary unit almost kind of skips that. It does set a threshold, but it's done in IDEA through the process, so you don't have to do it separately and then come into IDEA and dictate all that information. It'll automatically identify what's considered an individually significant item based on what you've determined for your thresholds, and it'll automatically select those items as part of the sample as well. Additionally, if you are expecting there to not be any differences or variances in your sample, if you've done control testing and things look good, if you have a history of experience with the client, and generally their AR is pretty well handled, they follow up on it regularly, confirmations come back correctly, whatever the cases may be, if you are not expecting any differences, you can actually end up with a smaller sample size than you might otherwise in random sampling. So there's some benefits there if you're trying to be a little more efficient in your project. And you can see kind of the growth. So random sampling, 1 step, stratified, 2 steps in IDEA. Monetary unit kind of brings that planning aspect and determination of individually significant items into the IDEA and kind of adds it as the first of 3 steps. So the first step in IDEA is to plan the monetary unit sampling, and then you can estimate your sample size, and then IDEA will extract that and actually generate a sample for you. And so when you first click on monetary unit and tell it you want to plan a sample, it's going to open up this window for planning, and you can tell it what value you're testing. So in this case, we're testing balance. Whether you're testing positive or negative values. That is one caveat for monetary unit sampling, is if you're concerned with credit memos in AR, random sampling might pull those. Monetary unit sampling, you'd have to do a separate calculation for the negative values. Excuse me. But I think it's generally, unless they're large credit memos, they're not as material to the financials themselves. So monetary unit sampling can kind of be easy for that. And then you have to select your confidence level, and this is kind of the first thing. IDEA defaults to 90% for this example just because the population is so small. We're going to go with 70. But this is based on whatever your risks are identified for that section. So and your confidence going into it. So, some audits you might have a confidence level of 95, some 90, some 80, whatever you've determined based on your initial planning for the audit, you would put in here. And the confidence level is kind of used generally to calculate like tolerable misstatement or individually significant thresholds. So this is where it's incorporated into the aspect for IDEA. And then you want to tell it what your tolerable error is. So what error could be in this population in total that you would not need to, propose an adjustment for. And so in this case, we'll set it at 10,000 and say anything, if we find errors over 10,000 in our testing, we're going to have to propose an adjustment or get the client to adjust their accounts receivable to correct the number, which kind of makes sense. 10,000 on 280,000 might seem reasonable. And And if you have an expected error, you would put it in there. So if you know that there's one item that's wrong, and it was wrong, $4,000, you could put that in there, whatever the case may be. By default, I like to generally presume my clients are hopefully correct, so I'm expecting 0 errors, but sometimes I'm surprised. And so once you have this, you just click this estimate button, and you'll see that down in this grayed out section, it has completed itself. So initially it was 0, and so now IDEA is updated and saying, okay, well, based on confidence level of 70%, tolerable error of up to 10,000, your sample size could be 15 with a sampling interval of 85-88. And so this 85-88 is effectively what IDEA has calculated for the monetary unit formula to determine what an individually significant item is. So if an item is more than $8,588 outstanding balance, it's going to be picked 100%, just based on the way the formula counts. And once you do that and you click accept, so you're like, okay, that'll make sense to me. I've estimated it. Now I'm going to accept it. It's going to bring up this extract window. And you can tell IDEA how you would like to extract, if you want to do a fixed interval or a cell selection. I think by default, fixed interval is the general approach. I haven't done much with cell selection because I haven't run into errors with fixed interval selection. And then the next step that you want to do is tell it how to handle those individually significant items, those high values. And so by default, it will offer to create a separate database. So it'll go to high value in database. But I prefer to have all my samples in one file just because it's a little easier to export and send to the client and say, here's the invoices we want to test. So you can select this high value in sample as aggregate, and that just means it's going to put all those items in the same sample as the smaller items, which makes it a little easier. And most of the other information down below is automatically pulled over. So the balance will pull from over here on the left. The sample interval will pull over from your estimate. And so you can change that if you want to. You don't necessarily need to, and I found that I've yet to find a need where I needed to change that from the initial plan. And then this random starting point is effectively your random number seed. So instead of having just a random number, it tells you what penny to start counting from. And effectively, the way monetary unit sampling works is it's going to, based on your sampling interval, it's going to count up from that. So if you start at $10, it's going to look at the first item in accounts receivable and start adding up all the balances outstanding until it gets to $85.98 because you started at $10. So it's going to add $85.88 to that. Whatever invoice that is, it's going to pull it. Say that's one we're testing. And then it's going to add another $85.88.25 to it, pull that item. And it's going to keep going down the list till it's considered all invoices for testing. So that way, if an invoice is sufficiently large enough, it automatically gets pulled because it's guaranteed to get hit within that $85.88. If an invoice is, $5, it is statistically unlikely that it would get pulled using this method. Still possible. You'll probably get some smaller invoices, but generally you're going to get bigger ones, especially for projects and clients that have customer concentrations or large dollar variances in what they sell. If you sell a refrigerator versus a CD, the refrigerator is more likely to get pulled because its value is just so much higher. And in general, that makes sense because it's kind of a bigger risk to the audit itself. Missing one CD invoice is not as big a deal as missing one refrigerator invoice. So that's kind of the overall approach. And then you just click OK, and it'll pull a sample for you. So we'll jump over to IDEA and kind of show you that process in action. So when you go to monetary unit sampling here, and if you already know, if you use a different program or a different form to calculate what your sampling interval is, you can actually skip the planning and just go to extract. But I find that IDEA does it for you, so it's pretty easy. And you can just go to planning, automatically kind of pulls, want to test balance, confidence level, defaults. We're going to change it just because the file's so small on this one. And a tolerable error of 10,000. And you can see everything's kind of set at 0 by default. But once we estimate, it'll jump in here and say approximate sample size, 15. That's our sampling interval. We're expecting no issues. And so as long as there are no taintings or variances from what we're testing and our sample size, then we're going to be fine with this. So we just click, okay, that looks good to us. We're going to accept it. It'll pop up with the extract window here. And we want all our values in one file so we can send it to our client, much easier. High value in samples aggregate, and then everything else is pretty much the same. This is our random number seed that it's chosen for us. And we'll click OK. IDEA will think for a moment and then provide us a file. And so here you can kind of see a lot of the same information, right? Invoice date, invoice number, customer, all that's the same. And then it has the audit amount and the new book value. So you can actually, these are blue, which means they're, I believe, editable, so you can change them. So you can actually take this form and kind of use it for your audit documentation. So this is what the invoice is, or the balance is, and you can actually adjust it based on your testing for these items, and it'll calculate like you can put in the audited amount, and it'll calculate the difference. And so you can actually use, and this isn't in the slides anywhere because we're talking primarily about the selection of the sample, but you can actually evaluate your samples, the whole sample, to see if it meets that threshold for being accepted based on your confidence level. Because you can actually set it so that, if you're expecting errors or expecting variances, you can add that into your planning, and it'll say, okay, based on this number of taintings, we can still say this is materially correct if one tainting in a sample of 20 is fine, for example. So you can kind of use IDEA to evaluate your solution as well. And then this has the same information, the record number, the total, and you can see it kind of starts 590210, and then it adds the 8,588.25 to it, and it just keeps going. And so you can kind of see this is how it's counting the dollars from the first item all the way down and selecting them every, roughly $8,600. And one thing that you might notice is that the first two items are the same exact invoice. And this is interesting because we need to test 15 items based on our planning, but one of these items is of a large enough size based on its balance that it got selected twice. Initially, once we hit the first 8,500 here, our starting point, and then when we added 8,000 to it again. So we're actually really only testing 14 invoices to get to our assurance. And that's kind of one of those things that I mentioned, that you can actually end up with a smaller sample size because certain invoices are so large that they'll count as effectively multiple samples even though you're only testing one time. So that makes it a little bit easier and a little bit more efficient, I think. But that's monetary unit sampling in a nutshell. It's pretty quick, pretty easy. That's kind of it. We'll pass it over to Lindsay for the third attendance check.
Thanks, Chris. Please select the term analytics. One question you might want to go back into, because I had two people ask about it. Is there a tolerable error amount you entered for planning different than ISI? Do you know what that means? I don't quite get what that means.
Yeah.
Okay, good.
So the terminology in monetary unit sampling is slightly different than your classical variable. So it doesn't use ISI or individually significant items. That sampling interval that it calculates is effectively what your ISI is. And so if we go back, and once this attendance check is over, I'll kind of jump back on that and show you.
I went ahead and closed it, so you have the screen.
Okay. So in our planning, I don't want to sample a sample. So we go back to monetary unit sampling and click plan. The tolerable error that we're selecting is effectively our tolerable misstatement, or like the threshold for where we propose an adjustment. Because, and one way to think about it is if you have an accounts receivable balance for $20 million and you test a majority of the items and you find one invoice and only one invoice in all your testing that's off $5,000, is it kind of, and this goes into like materiality, but is it worth your time or the client's time to really adjust $5,000 on a $20 million balance? It might be, and that's kind of where you set in your confidence level. Like, how confident are you that this number is exactly correct? So if you set it at 100%, that might actually, I mean, I've never done that, so I don't know, but I would presume that would pull a lot more samples than you would initially want. So that's kind of how accurate you want to be, and then your tolerable error becomes what the threshold is for you to propose an adjustment. So in this case, if we said if there's more than $10,000, if the balance we're testing is more than $10,000 off from where it should be, we're going to propose an adjustment. And so that's what we set as our tolerable error. Up to $10,000, it's not material. We're not going to propose an adjustment. And then when we estimate, this sampling interval is effectively terminology is delivered, but it's basically your individually significant item. And what it's saying is anything that's over $8,588.25 is going to be picked 100% because we're only counting by that amount. So if it's bigger than that, it's definitely going to automatically get picked up. So if you think about it, comparing it to kind of how we did the random sampling, the sampling interval here actually has a lower threshold for your ISI than random sampling, and that's just kind of the nature of the formula used to calculate monetary unit sampling. But it gets to the same confidence level either way. So this one says our ISI, if you wanted to use that terminology, is a little bit lower than if we did random sampling, but we're still getting the same confidence level both ways by testing those 10 items or these 14 are really, yeah, 15, but it's really 14 because one of the items automatically got selected twice. So it's kind of that approach to it. It's a little bit different, but it gets to the same confidence and the same statistical approach for your sample selection. Hopefully that answers your question. If not, let me know and I'll try again. So kind of moving past those are the two big sampling approaches that we're going to talk about. I also want to talk about the aging function that IDEA has. And you can see kind of near the sampling tab, but also under that analysis ribbon is this categorize section, which lets you do a lot of initial analytics. And I think one of the big values that IDEA has is it allows you to perform analytics that you might not have previously been able to do, or it lets you perform them much quicker and more efficiently than other methods. And so aging receivables is probably the one I like to use the most. There's a lot of benefits to it. You can get, it's always nice when our clients give us accounts receivable aging, right? It's already aged in 30, 60, 90-day increments, but they might not be able to do that, or they might not have done it yet, and so you don't want to go back and try to get more information and kind of, poke the bear. There's a lot of reasons that you might want to do it, or you might just want to verify that their system is correct. Maybe their report says it's aged as of 1/1 instead of 12/31, or it's a real-time like DAX-based system where it runs the aging as of the date the report is run, and not necessarily the date of 12/31 that you want it to do. So there's a lot of reasons you might want to do this, but it's very useful for verifying accuracy. If clients base their allowance calculations on their aging, it allows you to recalculate their allowance very quickly and efficiently, and it can just help you in general analytics. One of the things I was just thinking of the other day is a lot of clients that I know look at their accounts receivable, weekly, monthly, daily. Obviously, the more often the better. But they might not necessarily consider how their receivables are aged, 1 month versus the next month. So maybe there's certain months that they just have slower collections, and is that people taking time off, or is that clients taking longer to pay? Like, there's obviously more to go into that, but I think this is a good way to start looking at things. And so when you click this aging, it's really very, very easy. It pops up this window and it says, where do you want to age everything as of? And so you would just change this aging date. So you can see in the example here, we've set it to year end, and it is in year, month, day format. So from largest to smallest. which is kind of a standard computerized way. Not always the most intuitive for us accountants, but there's a little calendar feature here that you can actually just go in and click the day on the calendar that you want to age it as of, and it'll auto-populate the date for you. So you have that option as well. You can base it on the aging field. So in this case, there's just an invoice date. But if you have a system that generates an invoice date and a due date, you could age it for both, depending on the client's approach. And then, of course, the amount that you want to total it on, whether you want the invoice amount or the balance. We obviously want the balance. And then you can set the aging intervals based in days, or I believe in months. There's some other options there, but generally I think days is most common. And you can adjust these however you want. So if you want to, if your client has, discounts of 2% net 10, you could make it like category 1, 10, category 2, 30 days, 60 days, 90 days. So there's up to 6 options that you can do. In this example, we really only need 30, 60, 90, 120 days. That's kind of where we're going to be concerned about. And then you want to make sure that it creates a result. I believe IDEA does this by default, but the result for aging is a little more useful than the database, and we'll kind of go through and I'll show you why as we jump over to the IDEA file. And so you can see sampling was over here in the kind of the top right, and as we move to the left in this categorize is where we're going to do our aging. And it automatically populates the date that you're doing this, so you can see it defaulted to today's date. But you can always just break this little calendar button and go back and select the date that you want to test. So we want 12/31. We're going to test it based on the balance. And then I think by default it goes to 30, 60, 90, 120, up to 180, which you may want or you may not want. But you can always just delete categories that you don't need to consider and then create a result. And we'll create a database too, just to kind of show you the difference between these two. But the result is kind of your key function. And this is a database aged based on those categories. So you can see up to this day, so up to 0 days, 30, 60, 90, up to 120, and then over 120. And if for some reason a file didn't have an invoice date, it would show down here in the error. Thankfully, that's not the case. And it tells you how many records are in the file, 50, the number in each category. So there's 15 under 30, another 15 between 30, 31 and 60 days, 12 up to 90 days, and then 4 that are over 100, four that are up to 120 days, and then 4 more that are over 120 days aged. And it shows you the percentage, and it shows you the debits and credits. So if there's credit memos, it'll calculate those percentages separately. So you can kind of see the breakout. Roughly a third of the client's receivables are current. And then, another 23% are over 30 days aged, but not quite 60 days, and so forth. And then it also calculates the net value and the percentage, so you can kind of do whatever preliminary analytics you want on this, which is very useful. If we go over here to the aging database that is created, it basically gives you the breakout by age, so you can actually see these are the invoices that are less than 30 days. These are the invoices kind of in the middle, aged less than 60 days, less than 90, less than 120, and greater than 120, and any errors. So it kind of breaks it out by invoice and shows you where it is, if you wanted to see that, or if you just wanted to do your initial analytics. Anytime you create a result, it shows up over here. So you can see I've done this a few times just to kind of make sure everything works correctly, and aged it a couple different ways. I think if we go to one of these AR agings might have been like on 90 days, for example. But those are the options that it's really, I find, a good starting point to consider your analytics is how your receivables are aged. It's good for, like I said, recalculating the allowance or whatever analytics you might want to kind of start with. And that's AR aging kind of in a nutshell. There's a bunch of other tools that we started using here at my firm with IDEA. The first one, and I don't know how much time we have, so I won't go into too much detail. I'll just kind of cover these. And Lindsay can tell me if we want to go into more detail. But so gap detection is the concept that if you have a sequential number, so if your client issues invoices, invoice 1, invoice 2, invoice 9,988, 9,999 sequentially, you can actually use a gap detection to look for missing invoices in that listing. And you can do the same for check disbursements. In theory, you should be using a numbered check stock, so you can see if there's a missing check in your disbursement listing. So it's another check to kind of see if your population is complete before you start testing. So any form of sequentially based numbers, you can do a gap detection and say, hey, please find the numbers, please find where numbers are missing so I don't have to look at a 45,000 line long Excel file. Benford's law, or Benford's analysis, it's also known as the first law, or the first digit law, and it's the theory that if you have a sufficiently large enough population of numbers, the first digit of those numbers should be 1 roughly 30% of the time. And that kind of decreases all the way to the first digit should be 9, a little less than 5% of the time. And so if you were to put in, for example, your personal bank statement into IDEA and then run a Benford's law, you should kind of see that curve. A classic example that we always use is, if you go to Chipotle for lunch every day of the month, you might see a spike in, $6 or $7 or $8, depending on what you get at Chipotle. You'll see this spike in that number because that one keeps recurring more often than just generic expenses. So Benford's law is a really good analytical tool to look for oddities as a starting point. It's not an ending point by any stretch. It just kind of can help you see, here's an area you might want to focus on. It's useful for disbursements. You can use it for journal entries. You can use it for AR as well. I think it might be more useful for actual sales invoices for the year rather than just what's left in AR at year end. The join database function is a tool and idea that allows you to take two databases that might cover different time periods or might be for different things and put them into one or analyze them against each other. A classic one that we've done is if you have a listing of all your clients' vendors and a listing of all their employees, you can join them and see if there are any vendors that are employees or that share an address. If your employee's address is the same as a vendor that's not that employee, then that's a kind of a red flag that you might want to investigate. So that's another feature in IDEA. And then the duplicate key detection is one that allows you to look for duplicate factors in a population. So if you had, for example, a listing of all your employees and all their addresses, you could use a duplicate key detection to see if there are any two employees that share the same address. Obviously, if they're related or family, that makes sense. But maybe if they're not related, it's one of those things you could check. Are both of these employees real? Why are they sharing the same address? Excuse me. And there's two types of detection that you can do with duplicate that you can use with duplicate key. The first, the basic detection, just says, do these two things match identically? And very often that'll work if you're looking for a duplicate check on a listing of all disbursements. But the other one that's kind of new in IDEA 9 is the fuzzy logic detection, which basically says, are these two things really similar? And a classic example is, if you live on 101 Main Street with street spelled out, and then somebody else lives at 101 Main Street ST period, the fuzzy logic will actually say these two are similar enough that you should look at it, whereas just the general duplicate key detection doesn't, because those are different. Street spelled out is not street with a period. And then the other thing that I just want to real quick show you is the field statistics analytics. So we kind of jumped back over to IDEA here, and we talked about the data and the history, but there's also this field statistics tab, and this allows you to just at a quick glance see some high-level analytics on your database. So it shows you, if we're concerned primarily with the invoice amount and the balance, it shows you what the net value of those are, how many are in each, what the standard deviation for an invoice is versus how much is outstanding, what's the average amount, of an outstanding invoice versus the average amount of the bill. So you can do some analytics there, and you can do it on date. I believe there are some character statistics, but primarily number and date. So a perfect example here is if we go to date, we can see that there's 50 invoices issued between December 1st, 2015 and basically the 29th of 2016, and that the most commonly issued billing date was a Thursday. So if the most commonly issued billing date kind of should in theory match with their billing schedule, your client's billing schedule. But you can also see based on like a month breakout. You can see based on a day breakout, if a lot of invoices were issued on Sunday, that might pose a question. We have a couple on Saturday. Does a client normally bill people on Saturday? That's a good question. This is a sample file, so probably not. But that's some additional kind of starting points for your analytics, is to look at what your field statistics are for both your dates and your balances. And Idea kind of just automatically generates that stuff for you, which is super useful. But that's kind of the high level of the tools I have. We'll pass it over to Lindsay for the last attendance check. Lindsay?
I forgot to unmute myself. Apologies. Please select Benford's Law as the term that you need to select for the attendance check. If for some reason you can't work the poll, you can go ahead and type the word Benford's Law into the comments section as well, and I will see that. We are about to go into questions. Is that correct, Chris?
Yes.
Okay, we are at about time. I want to give people a few more seconds to go ahead and complete the poll, but I want to go ahead and ask my first question as well. We had a couple people wanting to get a little bit more information about the seed number, and specifically if they had originally sampled 10 items and then they needed to expand that sample to 20, how do they have it include the original 10 items? And I know that it has something to do with the seed number, but if you could show us that, that would be great.
I can absolutely show you that.
All right. I'm going to go ahead and close the poll, and we will go ahead and do our first question, or respond to our first question.
Okay. So if we go back here, so if we go to our random sample that we initially pulled, and you can see there are the 10 items that we pulled way back at the beginning of the session. Idea has this task in the top left that's a rerun task. So anytime you have an item, you're like, oh, I made a mistake, or I want to pull more, or I want to do something else with what I did, you can always rerun the task, and it'll default to not only showing you exactly what you selected, so you can see we initially pulled 10 items, but it'll automatically populate your random number seed, so you could re-pull that, and you can always just update this as you were pulling a new sample. But if we needed tested, 15 items instead of 10, we could just change this number of records to 15, and when we click OK, it'll generate, and the first 10 will be the exact same 10 from the initial sample. And so if I jump between these files, you can see 1 through 10 are going to be the exact same on both, and then it just adds the next 5. And so basically the random number seed is just telling where in a very long pattern of randomly selecting numbers to start. So if you give it the same seed, it'll start at the same point and always pick in a same pattern. So in theory, if we use this random number seed and told it to pick all 50, it would just reorganize them in a new pattern based on that seed. So you can always go back and put in the same seed, put in a different number of samples, and the first X, however many you select initially, will always be the same. It'll just add more on to the end. And that way you don't have to go, oh, did I already pick the sample? Do I have to double check? You can just up the number, and Idea will give you those new ones.
Thanks, Chris. We're at time. I'm going to go ahead and read. Actually, I guess I'll go over Chris's information first. If you have any questions that we didn't get to, Chris has his information on here. You can reach out to him. You can reach out to me at marketing@automation.com, and I will make sure that your questions get to the help desk or to Chris or to one of our salespeople to reach out to you. We are going to be emailing the CPE certificates. Since we're at time, I'll let, if you need to get off, you can, but if you want to stay on, I'll go over a couple more of these questions if you have time, Chris.
Yeah, of course.
Okay. So a couple people are asking about determining an appropriate confidence level, or I guess a confidence percent a level percentage for
Mhm.
monetary units sampling. Excuse me.
Right.
Can you go over that a little bit as well?
Yeah. So I don't have a perfect answer on how you determine that, because a lot of that will depend on what you've. I should probably actually just go back to the database. So it kind of depends on your audit approach and what your identified risks are. Obviously the more risks that you've identified to a population. So in our example, accounts receivable, the more risk that you've identified, the higher value dollar value that the balance is compared to the rest of the financial information, can kind of change how confident you want to be. I know there are certain guidelines with like SEC compliance for how confident of a level you have to set. Generally, I don't think I've seen anything below like 65, 70%. And that kind of varies depending on what you do. So that is one thing that you kind of have to determine before you get into monetary unit sampling. Usually so one thing that I've seen, for example, Thomson Reuters produces Checkpoint and PPC, and they have a lot of audit guidance, and one of their forms for standard random sampling has you calculate a performance materiality or tolerable misstatement level based on 1/3 of the materiality for that audit area. And so if you think of tolerable error and the confidence level as the inverse of that, so if you're saying, well, we're comfortable with up to 1/3 of the material number being wrong, or if there were an error in that, we'd be okay with it up to 1/3, then you would use 67% as your confidence level, because it's kind of the inverse of that. If you can't have a tolerable number, if you can't have a misstatement, more than 10% of AR, then you would want a confidence level of 90%. And so that's something that your audit team is going to have to plan and discuss and kind of determine before you get into the monetary unit sampling. But that's basically the way I think about it. It's always the inverse of whatever the performance materiality is on your like standard random sampling.
Thanks. I'll do one more, and I'm trying to figure out which one would be the best one to do. Um, I guess is there a way to focus on low dollar items to be selected in the sample?
In random sampling, yes. In monetary unit sampling, no. In random sampling, you could stratify it and say, if we're concerned that there's issues with smaller numbers, you could just say, okay, everything under $100 is one category, 100 to 1,000, 1,000 to 10,000, and then you could weight your numbers for your sample on those categories. In monetary unit sampling, the core principle behind it is that it's probability proportional to size. So the bigger it is, the more probable it is to get selected. So you can't focus on smaller dollar values that way. If you are concerned with smaller dollar value amounts, generally random sampling is probably your better approach.
All right. I think we'll go ahead and close out. We have a couple more questions, and like I said, I'll make sure that we can answer you offline, because I'm not 100% sure about all of them. So, thank you for joining us, Chris, and thank you for joining us, everybody. I hope you have a great weekend and the rest of the week. And the CPE certificates will be sent later this week and into the early part of next week. Have a great day.
Thank you.